Well, good day, all. Ira Epstein, and here we are with your Spider ETF stock market wrap-up, and this wrap-up is for the evening. And we're here now on Monday, the 15th of September, 2025. You know, you got to ask yourself a question now. You're 48 hours roughly away from getting the FOMC decision and seeing the reaction to it right after it comes out. I fully expect that we're going to see 25 basis point cut. I expect that the Fed chair will come out and say he's data dependent, but have a dovish bent to it because of the labor market. But I think he'll give you warnings by saying he's still looking over his shoulder. He sees that inflation is climbing. It's not galloping, it's gradual. The Fed's still of the opinion it's more or less for them a one-off event that'll go up to a number and start fading, because the import of goods in the U.S., how big is it to the total economy? That's their thinking. I happen to think it's still pretty big, and I haven't agreed that it's a one-off event with anybody yet. I'm still of the opinion once it goes higher, it stays higher in that category. And that'll be very difficult for the markets to say, oh, we don't have inflation. We will. Do I think it's going to gallop? Don't know. I don't know how much we've seen. I don't know who's eating what out of those increases. What I do know, and I read an interesting paper, that all the tariffs we're collecting aren't changing, that the U.S. is operating its economy at a deficit. So as much as we hear the president say, oh, the big, beautiful numbers that are coming in and all, I don't know. I'm not seeing that deficit come down, and that scares the heck out of me. Where are you going to get the money? Where are we going to get it to just pay the interest, which, by the way, as rates fall, that amount falls, and that's helpful. But I don't see in this administration a lot of cutting of costs. I see people costs going out. I see we've let people go, but this is my thought. The other thought that I just want to share, I don't know if this is the right time now with a day and a half left that you start jumping in or jumping out. I mean, if you have a lead on a market, I can see holding it, you're saying it's good. But going right into the eye of the storm, then knowing right after 1 o'clock that wall is going around you and it's moving, now you got to go through it again. We have any profit? I don't know. Don't know the answer to that. So I am concerned. I appreciated what happened in Tesla. Yes, it fell $15 from the high. I get that. But Elon Musk bet on Elon Musk. Congratulations. Elon Musk, please stay out of U.S. politics. Do your business. You're going to do great with your business. We will see where this all comes. All right. How's the car sales going? Where's the robotics that we all want to see? Where are we with all the taxis that we should see even more and more of them in Austin, Texas? And how are they doing? I saw today a video of a Tesla full drive one averting a crash today on the video. And the one comment was, it did it quicker than they think a human could have done it to avoid that. Those are the positive things, but Waymo can do that too. And you got all these other little ones, startups coming. So I worry about that. In the stock indices, obviously the market's still higher highs in them, but nothing grows to the sky. I'd love to get a pullback, and I'm a little concerned that the last 2 weeks of September, on a historical basis, that's all that it is. History doesn't repeat itself enough for me to say, just bank on it, this is going to happen. I don't buy into that. But on a historical basis, the last 2 weeks of September are typically not good for the stock market. Then it starts coming around in October and picking up steam into the end of the year. So I'd like to get more of a break in the market and play that. That is the way that I'd like to see it go. Let's get to this where you can read it. Here we go. You're going to get the import-export price data at 7:30. Weekly retail sales from Redbook come out at 7:55. They've been running about 6.25%, 6.5% increase week over week. The Federal Reserve monthly industrial production and capacity utilization numbers around 815. National Association of Home Builders, their index number, not existing or new home sales, but the index itself. And the U.S. July business inventory report will come out at 9. We all know that mortgages are falling. That is a benefit. If you're watching stocks like Home Depot, you know that they're benefiting because the remodeling part of the business, that's coming alive. You can see it. You even went too far on some of the other markets with the big breaks, I think, the other day. We came back with Restoration Hardware up $5 today. Netflix, look at this range. I mean, it's pretty amazing. But I keep saying, in that 1180 zone is where this market is making a statement. It doesn't want to go under that and stay under it. Look at how beautifully you came back in Amazon. It's still looking good. The consumer is not dead, and if they have lower interest rates via their credit cards, SoFi payments, all that, those could be very, very good things. In the metal market, you know the story. Inflation isn't going away yet. And we're going to fan the fuels of inflation by giving gradual interest rate cuts until it's not there. And I do think you're going to get 3 of them before we get to the end of this year if the economic data comes in just on par with what we saw in the past 3 weeks. How's that? So that's the school where I'm coming from. Uber up again. Keep reading all these reports, the death of Uber. Boy, are they wrong. Rocket Mortgage. So I covered it over the weekend, and I picked it because if homes are coming back, you've had the run. This market's primed, in my opinion, for a correction. If it can take out the lows of Friday, you could start something there of a break. That'll break the pattern, and you might get back to the 1920 level, about $2 lower. I'll take that. That's almost an 8 to 10% break in the market. And from there is where I think the story might unfold. You got up over the upper Bollinger Band, thrown right back, and momentum-wise, you're just overbought as can be. So I'm not saying you can't get a monster reaction to the upside. I'm saying I don't think I'd play for it. I'd rather see the market come down and restructure itself. Oklo just keeps getting wonderful press, and this is fission reactors, and everybody wants the next energy source because we don't have enough energy for everything. Now, we are seeing already that President Trump is planning his trip now to the United Kingdom. You know, he'll be there shortly. He's going to meet with the king and the prime minister, and he's got an entourage. They're talking $10 billion investment on this trip coming in. Those are big numbers. It's going to be NVIDIA, OpenAI will be there. BlackRock will be there talking about data center investments that they're going to do. The hit parade goes on and on. So you're getting this type of action because people keep looking at that. In NVIDIA, this is why I was looking for the market to grab some of the ability to hold the lower band and the 100-day average. This is the 3rd day in a row you've hit both. So I'm looking at that as trying to find a level of support, not a reason to buy yet. United Healthcare, if you can lose the embedded reading, we could start a correction. I'm looking for corrections in the market. I have no intent of trying to buy that rally. I have every intent of on the break, waiting for the setups to develop if they will, and if I can come in. I already know I like this stock, but I like it back at 319 to 312, not at 347. In Home Depot, I just plain like it. It's got an embedded reading, but I think I want to see the reaction to the interest rate play before I'd make a move. You might say, well, it'll be too late. Been too late a lot of times in my life. It's when you're too early you get hurt. In Robinhood, pulling back, look for support right here. The 18-day average. There's also a gap in the chart. Charts like to fill gaps. I'm not saying it has to. I am saying they like to fill them. That fits in with filling the gap and maybe creating a better pattern to come in. I like Robinhood a lot. Tesla, when the owner puts $1 billion in, away you go. Now, do I think he's going to hit his targets to make that $1 trillion? I do not. But I think it's a great goal. If he hit it, c'est la vie. But if he doesn't, he's going to work so hard. What do you think that $1 billion he just put in on Friday could be worth 4 years from now? I don't think the stock will be down if he does his job. That's the thing. See, I don't think it's really an auto company. If you're buying Tesla because of the autos, I think you should run away. I think you're buying Tesla because of the events that could be if this man can get them done, which he has a great habit of doing. Doesn't win on everything. You know, the Boring Company didn't turn out to be good. I got a friend that's in business with him in Colorado he was building these cabs for the Boring Company, another type of vehicle. And my next door neighbor went in with it. I met with everybody and I go, it's too soon for somebody like me. Higher lows, higher highs, pulling back here to 1394. We'll see what goes on there. XLF, the financials. It's interesting that they're already correcting, because everywhere you go, people are saying, oh, I got to own financials because of all this. That chart isn't screaming, you got to own financials. That chart is saying it wants to correct a bit, and that's how I'm guessing it's going to play itself out. The industrial sector, did you bother to see today the New York Empire manufacturing numbers? You want to puke. They weren't bad. They were beyond bad. The markets had been in, I think, an 11.4 reading the month before. They were looking for a 5 reading. They got a negative, a huge negative number. And then I went through all the other categories. I did it in my subscriber video, so I'm not going to repeat it here. Not pretty. So this is where you've got to look, and you got to look at the employment number in that. It's not good either. So that I see what the Fed's going to be looking at. I'm looking for the market to find its footing, ideally at the 18-day average of closes, where you're at right now, and see what it can do. You might be better off looking at the weekly chart than the daily on that. In energy, lower highs, lower lows, and you finished underneath the 18-day average. The trend turned down until the market takes out Friday's high. If the market wants to add legs, it might be going down into the 86 to 85.5 zone. In the gold market, it's up and away to a new high with an embedded reading. If you don't believe me on my embedded theory of when the slow stochastic embeds what it does to markets, shame on you. I mean, it just shows itself over and over in these videos. Same thing here. And I'm proud to say that I've got clients that are my futures clients in silver and gold if they followed the recommendation. I have no way to know if they followed the recommendation. I manage no one's money. If people call me, what should I do? I don't even want to discuss that. All right? I want to discuss the charts and everything else. I don't want to be involved in that guy's own needs, because inevitably I care too much and I start thinking it out too hard. I'll look to see what 39.12 can do there. Copper doesn't stop. You've got shortages. Now, I saw Chile wrote today, and I'm talking the country. The country was talking today how well they're doing, and they've got more of these deals coming on, and there's going to be some merging of companies to get some costs down. That's going to be, but what do we do right now? Because that one event that happened with the Chinese company, they have not solved out at all how to get that mine back to operational. I read they're talking if they got to find another way to mine without those hazards, because they do care, and I appreciate that, about the miners in there. There's nothing worse than these guys getting trapped, and they've had a history of that. They're not going to let it happen if they can prevent it. Higher lows, higher highs. I hope you saw that movie about the, 12 miners? Wow. BND, who wants to be bearish in front of this Fed thing? I don't. But the dollar. Generally, when you cut interest rates, the currency falls. So far, that's what's happening, but it's not really making a run for the lows yet. It's just here and hanging in, so to speak. And in the euro, you can't seem to get up and stay over that upper Bollinger Band, so I get excited about the long side and it gaining on the dollar a lot. So far, if you got real excited, in no time at all, you were stopped out or under an immense pressure. Got to be careful when you see those things. And I try to be. So I'm going to be writing about all this. Tonight I've written already a good report. And I liked the report I did this morning especially. I thought that one was pretty neat too. So if you'd like to get my reports or others, there's a cursor up here. You move to it, you give it a click, or you go to iraepstein.com. We offer an awful lot of information. Go to the free offer section. But if you want to get my newsletter, get into the morning subscriber videos and get the positions on that I'm recommending, The place to do it is in the research area. Take advantage of it. Start fresh, because that's what we're doing now. We'll be starting fresh again as this report comes out, and now you get to see the trades as they unfold. I'm Ira Epstein. You have yourself a great evening. Watch the other videos, and I'll catch up with you first thing in the morning Flash video. Take care.